Okay, here's another rant about kind of about housing, but indirectly about housing. So what I have on the screen here is a sentence: "Human nature does not change with time or environment." Now, I extracted this from a page that outlines something called legal maxims. So let's talk about what legal maxims are. So most of the commercial law or equity law that we practice in this country and around the world for the most part is Roman civil law. And Roman civil law goes back thousands of years. So they've got a lot of experience with presiding over various different decisions to do with law. And so as this goes on over time, what happens is you start to notice patterns, certain things that end up the same way all the time. And so they began to make rules about certain specific things that would occur that would turn out the same every single time. And these became what they called legal maxims, or basically what they are is foundational rules in law that never changed ever, with very very limited exception. So this is actually a legal maxim that human nature does not change with time or environment. Now, when they say human nature, of course they mean not individuals, but generally the masses of humanity tend to move with very predictable outcomes. And that's what they're talking about. And right now, we're going through some real serious problems with finance. And because we all draw on the same pool of dollars or whatever currency we operate in, we're all sort of tied to that pool. And the pool is, in a sense, a limited pool. So we're all sort of drawn into this. So our human nature around dollars and how that all behaves is actually something that would comport to this: human nature does not change with time or environment. So we should be able to use that to look at situations and see exactly what these outcomes might look like. And as a matter of fact, I have a chart here. This is sort of what I call the emotion chart. And this is the phase of a market, right? So there's the takeoff, the first sell-off, the bear trap. As you can see, you can read through there and look it up. The delusion, new paradigm, denial, return to normal, fear, capitulation, return to the mean, and despair. And in the last video, I mentioned that everything returns to the mean. Mean is fair value. So, and this is a common, and this is all driven by human nature. These are all, look, enthusiasm, that is a human condition, right? Delusion, human condition of the mind. Denial, human condition of the mind. Fear, another human condition. So we're dealing with the totality of human emotion. And so this sort of validates that legal maxim, doesn't it? It shows this pattern that happens over and over again. You say, well, those patterns aren't exact. Well, they're not exact, but let's look at the average sales price of a house for the United States, because the Fed has far better numbers than Canada does. So we'll do that. It's all the same thing because, hey, after all, human nature does not change with time or environment. So Americans are going to behave in a very similar pattern to Canadians. And I looked at and I thought, oh my God, this is textbook. Look at this chart. Like, we'll have to flip just due to the way, the screen, I can only show a tab at a time here. We'll have to flip back and forth between these two. But if you'll notice, if you go down here and you go to the beginning of over to the bottom left where it starts down at around 129.9 there, and you look at over here, like the stealth phase, and you look at the takeoff and the first sell off, that's kind of like from about 1988 over here to about here. And then you have the first sell off. See, then there's a little dip. If you look there, this is the bear trap. This is the bear trap. And then it starts to move into media attention and enthusiasm. That's it moving up here. And then there's the greed, the delusion, the new paradigm, which is right here, trending up a very steep incline. What's so remarkable is this from here about 2020 through and right to the end of this chart is literally textbook. If you look at that and look at this particular area around here, around from greed, where it says public here in bigger gray letters, greed, delusion, new paradigm, denial, return to normal, bull trap, and fear, that's literally textbook of what you're looking at over here from about 2022 right through to the end of the chart. It's absolutely astounding how accurate this has turned out to be. So I think it's very fascinating that, human beings, we act the same way consistently, and it's kind of interesting when you see it laid out that accurately. So if you want to really see something like the last video I did was on housing, and I'm going to keep hammering on housing. And I'll tell you one of the reasons I'm going to hammer on housing, because those of you that are out there that are hanging on to this, yeah, the market's going to recover, and everybody keeps telling me everything's going to be good and all that. I'm here to tell you that, in my personal opinion, from my research and my time, looking at finances, which is extensive. I've been at this a long time. Doesn't make me an expert. I don't believe in experts. I don't really believe in authority. I believe in people who have the correct answer. And that's all that matters. So maybe I have the correct answer, maybe I don't. But here's my belief and why I'm talking about this housing thing. I'll be very frank and very honest. I am here to say that in the next few years, you're going to see a tremendous amount of people figure out that this real estate market isn't coming back. I debate with people all the time about this. I have friends that are in the construction industry. I debate with this, and they're totally on the opposite side of this. They think it's going to turn around, everything's going to go back to normal. And I said, why? And they said, well, we're lots of immigration coming in and all that. So they look at it as a very simple, market economics of the housing industry. But I'm here to tell you that the housing industry is really driven by debt. It's really driven by banking, because it's almost all finance. Very few people buy houses for cash. So because it's all financed, it's susceptible to all the idiosyncrasies of banking cycles. And I'm here to tell you we're in a banking cycle, but we're not in a short-term banking cycle this time. This is a 100-year cycle. We're going to have a very similar repeat to what we had back in the early 1900s. That's my opinion. But that opinion is supported by a lot of data. So, we're not going to get out of this without some pain. And all prices return to fair value eventually. And as you can see here, fair value is completely like the U.S. is complaining quite loudly, because I find U.S. people are a little bit more intrepid and they're a little louder when they don't like things, and they're complaining about their housing prices and their housing situation. But if you actually look here at the trend in this chart, if you can look at where it dipped down right below the S in the United States there, you can see where it dipped down. This was them clearing out some of their debt in 08, and you saw it kind of return to a little bit more normal. Now it's bumped back up again, and prices are escalating in the US, and people are complaining, but at least they're close. Like, home prices and incomes are fairly close. Look at this insanity in Canada. Like, it is I keep calling it the twilight zone, the 25-year low cost of money twilight zone. And I mean, we are just not equipped as ordinary people who don't have an understanding of banking cycles, who really don't understand borrowing, really don't understand interest rates. Hell, the people that work in the banks, I don't think understand them well enough to do anything correct, because if they did, none of this would be happening. So my problem here with this whole scenario is that it simply has to correct, but there's so much inertia against that correction. Everybody wants their house prices to be extremely high. And I'll talk about that in the next video. I'll talk about why wanting your home price to be really high is somewhat of a delusion. And I'll keep talking about this until people start to really listen. Some people are going to figure this out earlier than others. Okay, I'm going to get back to my original thesis. Some people are going to figure this out earlier than others, and they're going to play the smart game, and they're going to say, I'm getting out of housing. It's going south. It's going down. It's going to correct. Right now, there's a tremendous amount of resistance to that, and it's being supported by people in media trying to tell you, remain calm, everything's good, because that's their job. Their job is not to panic the public. If somebody got on the TV tonight on the news and screamed, oh my God, we're going to have a housing collapse, that like the whole thing would change overnight. And they know that. So they really can't be the first to send the alarm bells out. So people are going to have to figure this out on their own through osmosis or other means. And that will happen. People will figure out that there's a trend that's changing in the market. And a lot of those dollars, like I heard a statistic, I think today or yesterday, that 23% of all the homes owned in Canada are owned by investors. And so some of these investors are going to be some of those smarter people that are paying more attention. They're going to realize the trend and they're going to get out of it. And some of those dollars, all of those dollars are going to go into other assets. A lot of them are going to move into other assets. And some of those assets are going to be gold and silver. That is a fact. It has happened before. This is historical. And as we stated in the beginning, human nature does not change with time or environment. So this is going to happen. We are going to see this trend change. And some of those dollars are going to come into the gold market. And myself being in the industry, we're going to be recipients of that largesse. So this is why I get out there and I talk to people about it, because if you're going to be a first mover on this, I suggest you be a first mover soon, because as the old adage goes, I don't care about the bottom or the top 20% of the market. I only care about the middle. Those are good watchwords because almost nobody can time when a market is going to flip and change like that. But I sense that we're quite close right now. So I'm encouraging people with these talks to start looking at the reality on the ground and to start considering making that move now. Because for another reason, gold is going to be and silver are under great pressure. They're called precious metals for a reason. They're always in short supply. They're always in short supply, and now getting even shorter with silver, particularly with the solar market. They're actually not giving the actual facts about what they're using in the solar market. Up till now, we've been told that it's 150 million ounces a year when it's actually probably closer to 300 million ounces. And that's projected to go even higher, yet only 850 million ounces of silver are ever produced every year. And there's just no control dial on that. 80% of all silver comes as a byproduct of mining copper, lead, and zinc. So you can't exactly call up Rio Tinto and say, hey guys, come on, we need you to mine some more copper so we can have the spin-off, which is the silver. It's not going to happen. So you get what you get from 80% of the market. And even if you did have a silver only mine, it's going to take approximately 10 years to bring that silver online and bring it to the market. So there's just no control dial for that. So precious metals are in a very big squeeze. Now, they're also underutilized as an investment. I mean, only 1 in 200 people own precious metals. That's going to change. The historical average has been 1 in 50. And there's many experts who believe it'll go back there again because it has gone through this cyclical move before. And remember that human nature does not change with time or environment. So we're going to have similar outcomes to before. You have to understand this. This time may be a little different. I've heard a few people say this time is different. I think this time is different because it's a 100-year cycle. But the outcomes, I think, are simply going to be more grandiose, and the swings are going to be a lot larger, and the correction's going to be bigger. I think that's going to be the real change that illustrates this time is different. So what's going to happen? This is going to put a tremendous amount of pressure on the market, in the gold and silver market, and it's going to become what we jokingly call in the industry unobtainium. There have been times that this has happened in the past where you may literally need, if you really are serious about buying gold, particularly in any large quantity, you're going to need to place an order and wait sometimes as much as months. And of course, with us, you'd have a contract. With any good vendor, you're going to have a contract that's, you can use legally. If there's ever any issue, you're never going to have any issue with us delivering. But that's going to be very disconcerting for you because you don't know all those things about us or any other institution for that matter. That's a very hard place to be, to wait. So I'm here to say, if you're going to act on this, I would act on this soon, because it's going to be an unobtainium squeeze, and that's going to be a lot of stress for people. And the gold price right now is trending. It's at all-time high right now, and it's been gradually reaching all-time highs for the last month and a half to 2 months. And I believe that trend is going to continue. So if it were me and I was paying attention to this video and I was taking me seriously, not looking at this as entertainment, I would start considering, not financial advice. Obviously, I can't give financial advice here, but if it were me personally, I'd be considering looking in this direction and making a move before the crowd does. Because being that human nature does not change with time or environment, and all values return to the mean and all product prices return to fair value eventually, this is an inevitability. It's a matter of when. So knowing that, I mean, if you knew somebody was going to break into your house in the next 10 years, when would you install a security system? You'd install it today, because you really don't know when that time is going to be. So just a word of warning and a word of caution about the market and what's happening. And maybe it isn't real estate you're in that you're thinking of getting out of. Similar things are going to happen because we're living in the everything bubble now, meaning for the first time in history, stocks, bonds, and real estate are all overvalued. Those are going to change. That trend is going to go down. It's inevitable. all things return to fair value. Gold and silver are undervalued right now, and they're going to reach fair value eventually. So we're going to have the tables flip, in my opinion, and I think a lot of those dollars are going to move to gold and silver. It's an eventuality that's going to happen. You might as well be the beneficiary and the recipient of it. Thought I'd put that out there. Thanks for listening, folks. Have a great day.